Are you looking to retire with one simple strategy, just using SPY? Well, in this video, you should look no further than just using SPY in the wheel strategy, and I'm going to teach you how to use these two simple methods, essentially putting them into one and generating all the retirement income that you really need with simplicity, without any hassle or having to analyze single stocks. Just one ETF that's diversified, and this is going to be an easy step-by-step guide. I'll show you how $250,000 can generate enough income for you to retire using the options wheel strategy. Now, of course, there are some fluctuations. As with everything investing, there's risks, and I'm going to talk about those risks. Of course, you cannot generate the amount of money in the title that I wrote and every single month. Some months are going to be more, some months are going to be less, and it really does depend a lot on the market. So I just wanted to get that out there. But with that being said, I have personally been extremely consistent. So I'll also be discussing how to manage risk and manage volatility in your accounts with this strategy. I actually learned this strategy when I was working at Goldman Sachs, and I was looking at other portfolios of very wealthy individuals. And I think that this is one of the best strategies for simplicity, especially if you are a busy professional. Maybe you're a doctor, a lawyer, a pilot, a business person, and you just want simplicity. You don't want to have to do too much research. Well, this is really good. So again, not a financial advisor, but this strategy, in my opinion, man, it has some good sauce to it. So here's SPY. I'm going to quickly cover the sectors in SPY and the holdings. So the sectors, it has technology, communication services, healthcare, consumer defensive, utilities, basic materials, financial services, consumer cyclical, industrials, energy, and real estate. So of course, technology does make up a lot of this because technology is some of the biggest stocks. Specifically, you can see here, NVIDIA, very big position. Apple is the second biggest, then it's Microsoft, and it's Amazon. So really a lot of the hyperscalers are in the SPY ETF. They got Google, Meta. They have two different Googles, Google A and Google C. One has voting rights, the other one doesn't. Tesla and Berkshire Hathaway, and a lot more. There's 490 other companies within this ETF. Now the expense ratio is 0.09, so that's like $9 per $10,000 invested. Extremely good. In my experience, it's possible to achieve about 3% per month running the wheel strategy, and we'll get into the step-by-step process in just a moment. But in my experience, 3% a month is possible. Now, it's sometimes difficult because SPY is more diversified and it usually has lower implied volatility than a single stock. So with a single stock, I can reach returns of like 3 to 4% in an average month, right? Of course, again, I want to be clear, and mostly clear for the YouTube algorithm as well, because they flag videos, but when you promise. So this is basically, it's not a promise, and it could be negative. It really could be, but on average, here's the facts. The fact is, S&P 500 yields 10% annually. That's the news. That's the facts, right? So when you see people talking about like 30, 40, 50% returns per month or whatever, even like per year, 50% return, that's not common. That's not something Warren Buffett does. That's not something hedge funds do. Most hedge funds lose. So just so you know, that person is likely selling information. Here in the Options Retirement Academy, my goal is to be as honest and straightforward as possible on like what I'm doing and the strategies that can help achieve retirement. The fact is, 10% is what the market does. In my experience, I have done over 30%, but I've also used many strategies such as leaps. I have invested in Tesla. I was very smart on getting on SoFi, on Palantir. I have made many smart decisions, and I was early on many trends, and that's what helped me scale my portfolio to 7 figures. It took work. It was not, maybe there's some luck component to it. We've been in a very big bull run, but I've been investing for over 10 years. A lot of this stuff I learned. So I just wanted to throw that out there because I don't care about the YouTube algorithm. I just want you to understand the mindset of like what's possible, what's not, because I'm not going to BS you here and tell you, oh, you can make 10% a month. No, usually not. With the wheel strategy on SPY, it's just really a safe strategy where you have very controlled risk and return. So when I talk about risks and managing the strategy, the good news is there really isn't no managing this strategy. There's nothing that you need to do. It's so freaking easy. This is so easy. You can literally do it every 3 months and just trade for like literally a few minutes every 3 months. It's that easy, okay? So I'm going to go to trade options, okay? I'm going to go for like an expiration date. Look, it's up to you. You can go shorter expiration date as well, but I think like over 30 days is fine because the whole point of this is like passive income, safe income, right? So you're going to go to sell put. That's the first thing. That's the first step of the wheel strategy. The wheel strategy is selling put options. Once you get assigned 100 shares of per contract, right? and then you sell covered calls to generate more income. And then if you get assigned, you lose those shares. And that's the full circle. That's the full wheel strategy. That's it. You don't need to watch 1,000 videos, although I'll make some more wheel videos because it's my favorite strategy. This is literally my favorite strategy. This is the only strategy that you need for retirement, literally. But it's that simple. You sell a put option. So let me go to SPY. And by the way, it doesn't help me personally to be this straightforward and honest with you that this one strategy can help you retire. It doesn't. It benefits me to be all complicated and do this and do that and do this and get my coaching. No, this simple. I'm literally showing you the truth on like how simple this is. Okay, where you don't even just full free truth on what you should do. Go for a low delta. Go for 20. Okay, so this is a little high. So I'm going to scroll down. Let's see, 665, 30 delta. 30 delta, okay, so it's okay to go from 20 to 30 delta. To be honest, higher delta is going to collect more premium. So, of course, like 665 is going to have more premium than going down. As you see, when we go down, the premium gets lower. So it's not better, right? It's only safer in terms of assignment risk. But long term, you want to basically be invested in S&P 500. It's the best bet. Hedge fund managers cannot beat the market. Like these guys that have a PhD cannot beat the market. Right? Your guru on YouTube who's telling you, oh, they made all this money. No, their win rate is 90%. No, they're not. They're BSing. They're making up their stuff. The truth is, it is very difficult to beat the market. So if you can just use a safe strategy on SPY, which is like the safest investment because it's just the bet on the US economy, that's the safest way to retire. It's not the fastest. The fastest is single stocks, but this is one of the best ways to retire simply. Okay, so you would just sell this 665 strike, and that's it. You sit put until December 19th, and that's your step number one. Your step number one is to sell a put option, preferably 20 to 30 delta. I went a little bit higher because that's going to be a little bit higher on the income that you collect, and the delta here means there's like a 31% chance of getting assigned. That's the definition of delta. It's like how much the option moves, but also the chances that it will get assigned. So like really beginner-friendly stuff, like super beginner-friendly stuff, just you sell a cash secured put on SPY, you hang on to it, and if the put expires, good. It expires worthless. That's fine. If it goes into the money, you don't need to do anything. There's no management. I know everyone wants to manage it. How do I trade? How do I get out? You don't need to do that. You just chill. You enter, you hold. The premium that you collect is yours. You wait for expiry. If it's out of the money, good. If it's in the money and it goes below 665, you get assigned the 100 shares. So you need to have capital for the strategy. Okay, once you get assigned, you move over into step number 2. Okay, and it doesn't matter whether you go weekly or monthly. You can sell weekly options. You can sell monthly options. You can sell 3-month options. You get paid in proportion to that time anyways. So whether you make $10,000 a month, $30,000 in 3 months, or $60,000 in 6 months, or $120,000 in 12 months, it doesn't really matter, right? Like you should be fairly indifferent to all of those, right? So it doesn't matter whether it's weekly, monthly, or every like quarter even, right? Once you get assigned, you have 100 shares. Now you basically just sell covered calls, okay? So let's say hypothetically we got assigned now, right, at the current price. Let's say we got assigned at like 685. So we got assigned at 685 and now it's at 681, right? It's below where we got assigned. Well, that's fine. You would just go to sell call. Like let's say we got assigned today in like November. You would just sell covered calls. So if we had 100 shares and the current price is 681, our average cost is 685, it's not even that hard. You can still sell like 690, you can sell 685. Heck, you can even sell like even lower. You can see the break even is higher. So this strategy, it's like hard to lose. Like that's why the strategy is so easy. It's hard to lose on SPY. Unless the market crashes, which is possible. It can crash for sure, but everyone else is going to lose even more money because at least with the wheel strategy on SPY, you're selling puts that are out of the money. So if you get assigned, you don't have that initial decline, right? So if you sell a put at 665, like I showed you by selling selling put one, SPY is at 681, well then as it falls down, like you don't have that initial drop. You only start getting affected really once it hits below 665, right? So that is amazing because you have that margin of safety, you have that cushion. That's why this strategy is so powerful because it has built in like cushion, margin of safety, and it's amazing. Like literally you are saving money if the market goes down. Now if it goes up, well, you still make money. This strategy works like either way. Now, if you get assigned, let's say you got assigned at 685 again, and we're currently at 681, you can literally sell any of these. Like that's the thing. Like this is so easy. This is literally so easy. I would personally just go for like 690. Why? Well, this means, or 689, it's good enough. because you can make money until it hits that strike price. So now if my average is 685 and it goes to 689, I can make upside. So I'll make $4 worth of upside, right? And I get to collect the premium of $1,300. Like that's like bicep over tricep money. That is freaking amazing because now you have upside, you have capital appreciation, you have premium, you have the whole like building blocks and formula for income plus capital appreciation plus safety. So like it doesn't get better than this. This is literally the only strategy that you need to retire safely, consistently, and make passive income. This is the safest way. Single stocks will give you more income. Like I made a wheel strategy video. I actually made 2 on this channel because I love the wheel strategy. We have, just go to, first of all, make sure that you subscribe to this channel because in the Options Retirement Academy, it's me and multiple other coaches where we have partnered and we do every single day coaching, right? So you have a coaching session every single day and the community is super tiny right now. So it essentially feels like one-on-one coaching where I go on, I make trades, I answer questions, and I talk about hitting retirement. That is the full goal of this program. It's hitting retirement. It's not anything else. It's I'm going to hold your hand until you hit retirement. And we're looking for safety and consistency. SPY is built-in diversification. If you have some more time, then you can go for single stocks. So I made a video on, so just go to videos on this channel, first subscribe, then go to videos, and my first video is on SoFi, okay? SoFi, very strong stock, and I talked about selling puts there. So you should see the difference between an ETF and a single stock. The difference really isn't that much, okay? Managing is a little bit harder on a single stock because with SPY, you don't need to do anything. If the market crashes, it crashes. You weren't going to do anything anyways. You were not going to time it anyways. You can't time the market. You just cannot, right? So you don't need to do anything. There's no action to ever be taken since you can never predict the market. The market is random, but over the long term, it goes up. Everyone knows that. From studying finance, there is no 15-year period where the stock market was down. On a 10-year period, it's like up over 90% of the time. So running the wheel literally gives you a discount to getting into the ETF, right? It gives you a discount into getting into SPY. Amazing, right? And then when you sell covered calls, you're generating income. So when the traditional return of the market is like 10%, you're getting a discount to get in. Once you get in, you still have upside plus income generation. So, you know, some months could be 2%, right? It varies, it fluctuates, right? Some months could be negative. So, but anyways, if you have like $250,000 with capital appreciation plus covered call income, like you can really get to that that low 5-figure amount in the title. You can get there, which is amazing because that I think for many people is the freedom target and the retirement figure that would allow you to not have to work a 9-to-5 job and to reach that goal of retirement, right? That was my goal. And, you know, I make multitudes more of that, but it doesn't really matter because I'm not flashy, I'm not a huge spender, and I think 5 figures is enough to basically live anywhere, right? So highly recommend that you rewatch the steps that I showed you in this video. Step number 1, sell puts, pick a delta 20 to 30, a little bit higher in the 30s is fine too. Once assigned, sell covered calls. The same delta applies. You can still go to like 30 delta, but with covered calls, you can even do 40 delta. 40 delta would be closer to the money. It would be more income and less upside. So you get to choose yourself what feels better to you. This is really simple, but if you wanted more hand-holding, you want to understand this strategy more or just single stocks, how I pick them so you can copy me and the other coaches and get support for technical analysis, fundamental analysis, picking trends, then yeah, you're welcome to click the first link in the description and learn more. But I just gave you all the secret sauce. So take this knowledge and make some money with it.